Wayne McCurrie from Momentum is still with me at the desk. Wayne, Old Mutual, it's almost as if they've gone a full circle to Europe, a big trip across the United States,
and then
sorted this out. Julian Roberts has done that.
Yes.
Your assessment of where they are, because that share price went up 3.8% today.
Oh no, there's a very good set of results. I mean, not that many years ago, what was the share price? 4 Rand or something like that, and they were, I wouldn't say on the brink of bankruptcy, but they were not looking good at all. And now they got excess capital, so it shows you things can change. Now they're paying you a significant amount of money in dividends. Dividends were up quite materially this year, so companies can turn. But Old Mutual went overseas for a very good reason. They didn't make a success of it, but they went overseas for a very good reason. The South African insurance market is ex-growth. And costs are not going down. Costs are only going up with increased legislation, etc., etc., etc. So they've got a problem. They don't know where to spend their money. And in fact, all the life companies are like that. So everyone's looking at Africa, India. They've learned not to go try America or Europe or the UK. They've learned that lesson, so they're not going there anymore. But the industry is in fact ex-growth. Very good dividends. I mean, if you after dividends, the SA life companies pay very good and sustainable dividends. They're not bad investments.
Let's look at Nedbank in that mix. And it wasn't long ago, what, 2-3 years ago, they were trying very hard to get rid of Nedbank and couldn't get the price they wanted. Now they wouldn't try that.
They wouldn't try it because they got excess capital now. At that stage, they were starved of capital and they were trying to get in as much capital as possible. No, there's just no ways they'll try and do that. But all the life companies, MMI, Liberty, Old Mutual, Sanlam, they've all got excess capital. They're all trying to invest their capital in some sort of growth area because you can't do it in South Africa anymore.
Well, Julian Roberts been a good thing. Mike Levett, many people joining the market wouldn't remember Mike Levett, but following him, Jim Sutcliffe.
Yeah. Now look, I mean, Mike Levett took the company overseas, as I said, for very good reasons. But it was not successful at all. I mean, how much did they lose? 10 billion, 15 billion rand? It was an enormous amount of money.
And Sutcliffe left quickly, and it looks as if Julian Roberts has done the trick.
Yeah, he's done the trick. The market's been behind him, because remember, those guys faced tough times. Those were seriously tough times when everything was exploding all around them, and they had just spent that fortune in America. But lucky Scandia was actually a very good investment for them. But over time, I would not be surprised if they actually pack it up overseas and become an emerging market. Just concentrate Africa, India, other emerging markets. Because if you think things are tough here in financial services, they are way tougher in the UK and Europe because there's no more margin there.
Yeah, and no one's got spare money to spend on these products.
Nothing.
We've talked a lot about the Rand today, 9.10, you said it was 9.09 when I was at the wall a moment ago. And I also mentioned when I first looked at the board, a lot of the red strips there are the miners. Why haven't they?
I don't know. Sasol's up massively. All the big Rand hedges are up strongly. Naspers was up very strong. SAB, the rest of it. Yet the big mining shares taking a bit of pain. I just don't get it. They should at very least have gone up, not gone down. Look, Billiton's not too bad, but Anglo's market doesn't like it, and yet these are the parts of the market where value is shown. So the all shares done all right. You know, it's above 40,000 again, but it's not driven by the big mining shares. So I actually find that relatively odd on a day or in the last 2 days where the Rand has been significantly weak. They would normally be beneficiaries of it.
Anything else behind Sasol at this point apart from the Rand?
Sasol is just dirt cheap, quite frankly. I mean, at an 8 PE, Sasol is very, very cheap, and it's got a dividend yield that's up there with any other dividend yield on the market. Look, the dollar price of oil has fallen back from at 116 to about the 110 level, but of course the Rand price hasn't seen any fall like that because the Rand's been weak. And so we'll have to see. I still think Sasol is one of the cheaper shares in the stock market.
Well, one wonders why you see this and the market doesn't.
Well, then look, I mean, I learned this many years ago. There's only one good thing about being an investor, is eventually you know whether you were right or wrong.